The coronavirus has sent the nation's economy into a free fall. It's unsettling, and it'll be that way for a while. To talk about the market and the long-term impact is First Financial's Chris Hagedorn. He's with the Courier's Market Engagement Director, Kelly Snyder.
Thanks so much, Kyla. Chris, thanks for being here. So obviously this is an unprecedented time. I have lots of questions for you, but first of all, a bear market showed up in March. What does that mean, and what's the current state of the market today?
Yeah, sure. So as you mentioned, the bear showed up in the month of March, and bear markets are technically defined as stock declines of 20% or more. And this bear market was unique in that the drawdown was much quicker than most have been historically. In terms of where we are today, if you look at a price chart of the S&P 500, what you'll see is a drop from top to bottom of about 34%. So well beyond that 20% bear market threshold. But the good news is that we've recovered about half of those losses since then. And of course, to no surprise, most of this market volatility is related to the widening spread of the virus and the fact that recession has become a byproduct, if you will, of trying to slow the spread in the absence of a vaccine.
So what signposts are you looking at in order to understand the degree of the progress we're making? And then after suffering such a dramatic fall off, are we out of the woods?
Yeah, so I'll answer that second question first and just say that, while certainly we would say progress has been made, we don't think we're out of the woods with respect to market volatility. And market volatility, both good and bad, are actually hallmarks of bear market backdrops. In terms of signposts that we're looking for, we put together a pretty simplistic scorecard here of various items. And the main conclusion is that, some areas are still getting worse, some areas are mixed, and some things are incremental positives. So, the fundamentals are ugly and likely to get uglier, particularly with regards to the labor market. We'll get some pretty ugly readings in the upcoming reports in April and May. On the medical side, we upgraded this from a red to a yellow. We are seeing some early signs of stabilizations in the daily increases in cases, and that they've started to plateau. And so that's been a little bit better, although the absolute number of cases are still high. And then, the real incremental positive has been, policy stimulus, which has been both sizable and swift. And that really includes the CARES Act that was passed recently, as well as really what the Fed has done. But the last thought maybe I'd leave you with here is just the idea that, we think we're further along in magnitude than we are in duration, meaning, you think about that top to bottom drop of about 34%. That's right in the ballpark of what other bear market declines have been. But I think it's also important to remember that, we think this recession started in March. And, bear markets, especially those accompanied by recessions, take a little bit of time to recover from. So again, the conclusion here is, yes, we've made some progress, but we still expect some market volatility in the near term.
That makes sense. So what are some of the ongoing issues and longer term implications that will come out of this crisis?
Yeah, so I'll break this up into two parts. From an intermediate term perspective, I think the issues that are important to be aware of are a couple. Number one, the question that investors are asking has evolved. Originally, the question was, are we headed for recession? And if so, how bad is it going to be? Now I think the question is, what does the recovery look like? So in other words, once we turn the lights back on in the economy, how many lights are actually going to turn on? The other outstanding issue just medically is figuring out a way to implement widespread testing, come up with more effective treatments, and ultimately a vaccine. And I think those are really big milestone steps that we need to do in order to get the economy back to looking something like normal. From a long-term perspective, I think there are several things that we would highlight that may come out of this, some things to think about. So number one, I would say you could see more of a country-centric mentality, meaning an increase in nationalism as countries may have more of a desire to become self-sufficient as a result of this crisis. I think from a business perspective, you could very well see businesses that have a desire to bring their supply chain networks back closer to home in the beginning of sort of a deglobalization trend, which we think could have pretty major market implications. And then lastly, just at the individual level, if you think about how we work and how we consume, those behaviors have had to, adapt very rapidly in a short period of time out of necessity. I think what could happen is those behaviors may continue, if they're born out of preference. So in other words, I think you could see business models that may have to adapt to changes in preferences that may come out of this as well. So again, just some long-term things to think about.
Great. Well, thank you so much. I know how busy you must be during this time, and we look forward to having you on again soon to get an update. So
Thanks
back
for
to you,
having me.
Kyla.